Hey there, Kenneth French of Vast Voice, telling business secrets to entrepreneurs. We're very, very happy you stopped by. Either you're going to watch this or listen to this because you want to take your business to the next level. You're probably an entrepreneur who's either just starting out or you've been around for quite a while and you want to take your business to the next level. You're probably a real estate investor, maybe even a real estate agent, maybe a professional or of some sort, professional advisor of some sort. And well, you are stopping by because you need some valuable advice from one of the top industry leaders there is. Anyway, thank you very much. Once again, Kenneth French, Vast Voice, telling business secrets to entrepreneurs. Really glad you stopped by.
Kenneth French, vastsolutionsgroup.com. Today, we're going to be talking about risk reduction strategies and tax strategies to help you, the small business owner. Whether you're watching this, listening to this, you could be in Washington State where I am, you could be in Florida, you could be, who knows, internationally. You are going to be helped by just a simple concept that's getting a lot of questions. We're getting a lot of questions coming into our office about, well, risk reduction strategies and really also tax strategies. Mainly what we do, tax and finance with artificial intelligence sprinkled in to lower the tax liability for business owners. What we're going to be talking today about would be something called a captive or an 831B. It's going to be quick and we're going to get right to it. And this is going to add value. Again, you could be anywhere. You could be any small business owner with a large amount of risk and wanting to move the risk off your shoulders. So let's get right to it. So here we go. I'm going to show you, I'm going to present my screen so we get straight into the 831B world or the captive world. So here, let me present this. I think what's going to be really interesting to you is you're going to learn a little bit more about something you probably have never heard anything about, or maybe you've heard something about it, but you don't know enough about it. So let's say you have, I don't know, let's just say you have $100,000 of risk. When I say risk, potential risk shortfall. Let's say you have a slip and fall in one of your properties. Let's say, you have cybersecurity risk. Let's just say, as an example, you have product liability risk. Typically, most people don't cover those types of risks when really they should as a small business owner. Well, what do? You can go out to, let's say, Liberty Mutual, as an example, which is an insurance company, and you can pay them the premium. I'm making this up. Let's just say it's $100,000 of premium. You're writing a check. Now, that's great. You're covered in case there's ever an issue. Now, what happens? You write that check for $100,000. Awesome. You get a tax deferral, you get a tax deduction. Plus, on the backside, you get your risk taken care of. Now, that $100,000, if you haven't had a claim, you lose that $100,000. But at least you've had that peace of mind for those different elements of risk that we've talked about. That's number one. Now, number two, the big thing is, what you should potentially think about is, let's just say you fill in those gaps for some other insurance risks that you've never covered, right? Let's just say the premium therefore goes up to $300,000, whatever the number is, right? So what you can do is, again, now you could write a check for $300,000 to Liberty Mutual as an example, or what you can do is you can start your own insurance company. Now that seems like a daunting task. It is, frankly, but basically what you're doing is you're potentially going to a vendor, even us as an example, and we can help you put that together. We can either put it together as a unbundled, basically service provider, where we go to different providers that help us to put together the insurance company for you in effect, or you can go to a bundled provider, or you can have us just do everything. It's any number of things wherever it suits the client. Now, that $300,000 premium that we just talked about, you write a check, you get a deduction, just like the aforementioned idea. But now on this side, because you have your own insurance company, the nice thing is you are basically in control of that money. You are the CEO, or technically the president of that company. That's awesome. That's good news, right? Well, because you're not losing that money because you own the company, you're not losing that money. That's your money. Now, there's going to be fees, no doubt. There's fees, there's reinsurance fees, et cetera, but it doesn't even close to comparing to the amount of money that you're losing by writing the check to the insurance company. Now, I got to make something clear. You cannot just put these things together just like they're fake insurance companies. Some people have put them together where they're just checking accounts. Basically, you're getting the deduction and you would fail an audit, right? Now, the people who are doing that, either the business owner or the vendors or promoters out there, deserve to get busted. I'm going to tell you that. We at vastsolutionsgroup.com, our risk group does not play that game whatsoever. What we will be doing is we actually let the government know that we're doing. There's a curtain. Behind the curtain is you. We show the fact that you're actually putting together the captive. Now, both sides of the aisle in Congress like captives or 831Bs. Why? Because you're actually one of the huge number of business owners that is having a difficult time with respect to insurance. Okay. Insurance is really difficult, especially, let's say, in Florida, let's say for farmers. So both lines, both groups, the farmers, who are, sometimes they're supporting the Democrats, or sometimes the Republicans who are supporting the bigger business or small business, really, in some cases. So both sides of the aisle like 831B captives. Now, there's been some talk about the fact that, a lot of people are in the eyes and target because they're putting together fake 831Bs or captives. Those people need to get busted. Again, I'll tell you that. But we don't get involved in that. We get involved in helping the business owner, small business owners who have risk, who have probably a tax liability, and they want to make sure they can customize their own policies with our help. Let's get right to it. So here we're saying institutional ideas for your business, 831B captive. Now, I'm going to make mention of this because this is why we're getting some of our calls. Some people want to put away more than they can in an 831B. When I say put away more, meaning contribute, defer, it's actually in captive world or 831B, it's called the writing a premium. In a 401k world, it's called deferral. In a defined benefit plan world, it's called a contribution. So a lot of people, again, make note of the fact that they're quasi like 831B. 831Bs are like the 401ks because of the tax deferral, which that's not totally accurate, but I'm going to go into it because some of the people are calling us about this concept of 831B just like a 401k. So there you see tax codes, it was passed in Congress in 86 for the 831B or the captive, and 401ks were passed by Congress in 78. So 401ks are a little bit older now, but now owner matching contributions, they're tax deductible. Just like, as I mentioned, the captive premiums are tax deductible, just like you'd write a check to Liberty Mutual as an example. On the 831B side, you see tax deferred income to incentivize self-insuring unfunded liabilities. Well, that's a big word for it. The premiums are written and it has to look like an insurance company, basically. And then here we have tax deferred. IRS is basically, and Congress has put together 401ks to help replace income. So the government doesn't have to take care of retirees. In effect, the burden becomes that of in this case, employees or participants in a 401k plan. IRS has safe harbors for both 831B and also for the 401k world. Now, for the 831B, the captive, you must meet certain guidelines. You have to have proper structure. It's got to be an insurance company. You have to have true risk. You can't just say you have risk without having it as determined by an actuary. Hence the reason partially these are a little bit more expensive. Obviously, putting together your own insurance company is going to be more expensive than 401k because 401ks are out there in the marketplace. 831B is not as much. A lot more detail goes into putting them together. All right, now let's go to the next one. So you have to have a plan administrator. So, and that's what it is that we do. We help the business owner, small business owner in this case, usually, put together the plan design because they could get pretty technical. You don't know which types of risk can be covered. And at the same time, there's limits. There's IRS and congressional limits on 831Bs. Plus you have to put the policies together. You have to have real policies. Now, again, some people just put together a checking account and say it's a captive. You have to have real policies in exchange for the premium. In my example, $300,000 goes to an insurance company to get that deduction. In exchange for that $300,000, in my example, what do you get? You get insurance policies that cover your risk, that have statutory maximums, so you can't overwrite your premiums for an amount over and above the market. So now let's talk about transaction approval. You've got to have transactions as an 831B. Now you have to fit within the state guidelines, SEC guidelines, IRS guidelines, Congress guidelines, actuarial guidelines. There's a long list, but again, that's what we do as an 831B plan administrator, consultant, and provider. Now we have to take minutes. You have to typically meet once a quarter. at first, and then it's once a year, at a minimum once a year. Because it's, by the way, even if you're running your own company, should be meeting at least once a quarter, and at a minimum once a year, so you can go over your minutes, et cetera, et cetera. So again, that we tie that together. We do that work for you as an 831B, basically administrator, compliance, et cetera. So, as I mentioned, there's risk. I should mention what happened in 2020. We all know COVID. So you have to have risk. People don't realize as a small business owner how much risk there is. I don't know how many clients, new clients, prospects come to us and say, man, I've had this catastrophic risk. What can I do? Sometimes it's after the fact. They're underinsured. Now, we don't push insurance per se, but what we do is we use it as a small proxy to make sure the client is taken care of in the advent there is an issue. Now, you got to be careful not to overinsure, but at the same time, you have to make sure you're covering your risk. What is a likelihood of occurring, you got to make sure that you're taken care of in that regard. You don't want to have what happened to so many businesses in 2020. COVID-19 happened, and what happened to a lot of businesses? They went south. Well, if you would have had let's say a captive arrangement, you would have been taken care of in a lot of cases. Luckily, we had a lot of clients who had captives and who were taken care of, who basically had a backstop for whatever the case would be, business interruption insurance. And by the way, who knows if we're going to have another COVID type thing? Well, if you have a properly structured captive, again, 831B, that might be able to help get you over that next hump. Especially, let's say you're in your 50s or 60s, and you might have some concerns about, business interruption, because you want to sell it, as an example, you want to retire, you want passive income. What happens if you're in retirement? Your check that was coming in every month from your business, it stops. Well, that's another reason to have a captive. It can help you in that regard. You want to guard against some horrible circumstance like another COVID. And by the way, it's important to make comment here. The goals of an 831B they're fluid. You can change them on an annual basis. Now, typically, if you start a captive, or again, 831B, you have to have them for 5 years, but at the same time, every year you review it. Remember how I said every year you have to have an annual meeting? Well, basically what you do is you look at the prior year and see what happened. At the same time, you look at, prognosticate what's going to happen in the upcoming year. So you can really customize the captive to fit your situation. You can increase the premiums, usually you can increase the coverage. It's up to you, the business owner. Okay. That's really important to know. Now, what I would also say is sometimes people say, I just want to start for a captive for 1 year. There's an issue there. What's the issue? Well, if you really think about it, do you want to have all the expenses of setting up a captive only for 1 year? Sometimes that is the case, but usually when you put together a company, you want to put it together for the long term. So really be thinking about a 5-year time horizon when you're looking at putting together a captive. Because if you can just think about it, if you can cover risk for 5 years, whatever that risk is, you're in good shape. Plus, on top of that, tax deferral. Let's just say you're putting away, let's say you're putting away $1 million a year. You're writing a premium check of $1 million a year. I'm sure you're covering mass risk. You have a good operating company. Number one. Number two, something to think about, you're getting tax deferral, or what I should say is you're getting a deduction when you put the money in, and you don't have to pay for taxes or revenue received. Right. Then, generally speaking, when the premium has grown in excess of basis in effect, that's when you pay your taxes. Right. And what I would say is that discussion is, we could take a day or two just talking about that. But what I would say is the taxation, generally speaking, is a much bigger tax savings than one would think about. Plus, with the fact that you're not losing the premium, that premium is gone when you write it to Liberty Mutual, as an example. All right, let's go into kind of the 4 pillars, the 4 tests with respect to a captive, because again, we are doing everything legally here at VAST, and we want you to do things similarly. So you want to pass a 4-part test. Number 1, you want to have risk transfer. You want to have risk, and you want to move it to another party. So even if you set up your own, let's say, C Corp, because most of these captives are C Corps, you put together a C Corp, what happens is, you still have the same amount of risk, so you have to have a transfer with another party, right? And that's what we do. Now, 831B, you must utilize the law of risk distribution. You have to basically move it to a number of different entities or individuals to distribute the risk, because you don't want to just cover all the risk in one fell swoop. Plus, you have to have insurance. You have to have the policies. In exchange for a premium, you have to have a policy transfer as well. So insurance principle, that's pretty simple, right? Just like you would for any other insurance company. You write a check in exchange for premium, in exchange for policies, which basically allows you to satisfy the third part of the test. Fortuitous risk. You've got to potentially really have risk. You have to have the downside of some risk. You can't sign up for a risk that you have no chance of failing in that risk. Meaning, let's say as an example, our actuary says, you're never going to have the possibility of, I don't know, whatever kind of risk you want to, let's say litigation risk. If there's zero chance, I'm making this up, if there's zero chance of you having litigation risk, there's no reason for you to have a policy that outlines litigation. It just doesn't make sense. So you have to have these four elements to equal really being put into a captive. Okay. Now let's just talk about basic plan design. This is where it might get a little hard to understand, but I'm going to try to drill it down. So here you have the producing company, the underlying company, right? So you have that underlying company. Let's just say it's one of your companies. Let's just say it's company A for you being a business owner. And then at the same time, you have the direct writer of the policies themselves. Okay. And that's usually, as I mentioned, an S corp. And then all of a sudden you have what we put together with a couple of our different partners, and our company. Basically, think of it as a reinsurance pool. And then also on the backside of that, you have a risk co-op. So there's a bunch of different, and we get to help manage who goes into that risk co-op. So we try to make sure that there aren't people with high levels of risk, because that would obviously, just like an insurance company, you want to make sure that the group that comes to play ball with you is a good player. So you don't want to have a bunch of risk where you would have had a bunch of lawsuits, therefore potentially impacting you in your captive. So that's kind of the basic design. Now, it could get a little heady. We could put together a number of different policies for you. So what I would say is contact us if you have any questions. One way of doing that, go to our website, vastsolutionsgroup.com, vastsolutionsgroup.com. Tell them how you heard about us, and then we'll route it to the correct person, because this can get hairy, and we want you to understand what you're getting into. And why am I saying that? Because a captive insurance company, 831B, is really something to really think about and understand wholeheartedly that it really makes sense in your situation. Because if it makes sense, it usually really, really makes sense. And if it doesn't make sense, it's obvious at the get-go. So let's go in the plan options. Now, there's a whole huge number of risks that a lot of business owners aren't aware of. Business interruption, just one. Subcategories of it, direct and third party business interruption, because sometimes you're still going to have to pay for your software or for some of your vendors, and you're going to have to pay for them even if your business goes under for a while, because let's say another COVID as an example. Hopefully that won't happen, but pays for, payroll protection. If you have to continue, if something like whatever, I'm just making this up. Again, if let's say COVID happens again, some type of a COVID, you're still going to have to pay your employees, right? Well, if you have insurance on the backside, that's going to take care of that. So you potentially won't have to worry about that quite as much, because you've got insurance through your own captive. Political risk. Let's just say down the road, there's a new senator that's impacting your business, that's calling for a close of your business, making that up. Or let's say president, their policies are impacting you. So meaning it's definitely impacting your business. So what's one way to do that? Call in the captive. The captive will help lower your cash outlay, because you've got that captive as a backstop, if you will. Key employee. Let's say one of your top employees leaves, right? You can cover that. So what I'm going to do is I'm just basically going to stop there and just let you know, if you really think about it, the ones I've outlined already are business risks. So almost any business risk that can be covered in a captive should be covered in a captive and is covered in a captive. It's not personal liability. So let's say, as an example, you're driving your personal car and you hit someone, kill someone. That's not covered in a captive. It's only business risks that are covered in a captive. That's important to note. A lot of people, we've been getting some calls. Hey, can you cover my life insurance? Typically, the answer to that is no, right? It's only business life insurance. Now, sometimes relative to the business, you can do it depending on the circumstances, but really what it is, it's really any business risk. And again, we can get very specific. If you have any questions, please look at our website. We have a lot of tools with respect to captives there and a number of other things. But I mean, that's a start. Okay. Auto protection, as an example, IRS, sometimes industry regulations or industry compliance, maybe even E&O. So really we cover, again, captives are wide ranging. They can cover almost any type of risk that one would have with respect to their business. Employee risk, as an example. Let's say your employee steals all your goods or all your IP, as an example. Covered. What's another risk? A big risk that people sometimes forget about is, well, market risk. Let's say something happens to you in the market. You've lost a bunch of money because of whatever has happened in your market, your specific market, your product, your service. As a category takes a dive, it can be covered. So obviously you can see there's a number of things that can be covered with respect to your business. And what we do is, as a plan provider, we can make specific the situation to help you in your circumstance. So, what I would say is, why not see if it makes sense? Really, I mean, that's what I would say. See if it makes sense, if a captive makes sense. Sometimes we do a full-blown feasibility study. There's a cost for that, but it really depends on the circumstance. If really you need to go down that, sometimes you don't need to go. It makes a lot of sense pretty quickly. Our actuary will help us make that determination. Sometimes our tax attorney will also help us make that determination. But really what it boils down to, if you really think about it, at the end of the day, do you have risk? Do you have cash flow to write the premium check? And really also, what about, do you have a tax liability issue? So here are the things, to know. To participate in an 831B, you have to meet the 4-part test that we already mentioned. Primary benefit, you got to mitigate risk more efficiently than where you are typically right now. Okay. And usually, again, that's writing a check to an insurance company. The secondary or tertiary benefit, number 3, by the way, is tax liability. Will it lower your tax liability? It cannot be your primary driver. People don't realize in a lot of cases, the primary driver for anything really cannot be tax. It's got to be a secondary benefit. Even a 401k, even if someone's putting in an IRA as an example, you cannot be thinking as a primary driver, tax. It's got to be a secondary benefit. It's got to be complementary to business. It can't be anything but that. It's got to really help your business. It's got to help lower the risk for your business. And again, you could customize it. You're in control. I'm going to say you're in control as a business owner. The nice thing is you're in control of the premiums. You don't have enough control when you're talking to an insurance company per se. Right? They have control. They're the ones who determine what the situation is. Here you have more control because you're the one who owns, in this case, the C Corp. Now, there are contributions and limits, but luckily they're pretty far ranging because, again, you can customize the situation for your needs. So there are contribution limits and, specifics that you must abide by. But man, it sure is nice when you know that going into it because you're, let's say, in a one-on-one conversation, if need be, with us and or the actuary. So that's number 6. Number 7, what kind of tax deferral? Yeah, it's not tax-free. I'm glad I brought that up. It's not tax-free. People think, oh, I write the premiums, I get a deduction. Well, I never have to pay taxes. That is simply not true. Some promoters are out there saying that you get the benefit of tax freedom. No, you don't. You still pay taxes depending on your circumstance. But at the same time, you can mitigate the taxes because you've already written the check, just like you would with ABC Insurance Company, let's say Liberty Mutual. But again, you control the asset. Usually, let's say the capital account goes up and you take some money out via dividend, that's when you pay the taxes. Again, some people say the analogy, it's like an 831B, close, but what I would say is the nice thing is how much you're putting in because you're customizing everything. But you cannot really think that it's tax-free because it's not tax-free. Let's go to, you have control of the options, just like I've been saying, you have control, which is huge at the end of the day. And yeah, I'm going to remind you, it cannot be a tax-free transaction. There's got to be some elements of risk. Okay. Now, I'm gonna stay on this page because I want you to really think about these 10 things to know. Now, it might be a little complex. You might be thinking in your head, man, this is so complex. One way of figuring out is, just like I've said, a lot of the elements to a captive is custom. Everything's customized. We can customize a proposal for you so you understand if it makes sense for you. Don't go into any transaction unless you understand it. You truly understand it. Luckily, we've done huge numbers of these. We have over 10 right now in process, brand new ones that are in process. Now, what I would also say on top of that is, now, if you are thinking about only putting let's say a little bit of risk away, let's just say that, I might have $50,000 put into this. Usually it's not for you. These are usually for people who have well-heeled intentions, meaning they have maybe $300,000 they want to put away as far as premium on an annual basis for really 5 years. Now, by the way, the max limit, statutory limit, $2.8 million right now, and it goes up on an annual basis. So if you are a big wage earner, or really what I should say is a big revenue producer, and you have a lot of risk, it might make sense. But on the smaller end, there's different options that might be for someone who wants to put away whatever, $100,000. I would say, generally speaking, it's really for someone who's got a lot of risk, and they might be able to put away whatever the numbers, let's say at a minimum 300,000, let's say $1 million. They want to make sure that the risk is off their shoulders. They want to ensure that they can customize everything. They want to make sure that they get some tax deferral, and at the same time, knowing that there is some risk on the backside. There's some administrative things that's going to have to happen in order to get a captive going and on an annual basis. But again, at the end of the day, it's so nice for a business owner, knowing that you have risk taken care of, knowing that you can customize the policies, knowing that you can get some insurance that you wouldn't normally have gotten, and it's customized. And at the same time, you have peace of mind knowing you have reinsurance on the backside, especially if you're in a reinsurance pool, because depending on the circumstances, you're taken care of on the backside. So what I would say is the best way to figure all this out, if you need any help, vastsolutionsgroup.com. Again, vastsolutionsgroup.com. It's been a huge pleasure. I hope this has been somehow helpful for you to understanding a little bit more about captives. Now, what I'm going to do is I'm going to close up shop. Here. I'm so glad we've been able to help you to understand the world about captives. If you have any questions, you can call me, Ken or French, at 415-723-6532. Again, 415-723-6532. I'm with vastsolutionsgroup.com. The company's been around since 1969. We started by a man named Gary Coons. Sadly, he passed away not too long ago, and he's looking down at us, knowing that we've grown this company from a little tiny company to a pretty darn big company that does tax, finance, and artificial intelligence to lower tax liability. And one of the byproducts that we've fallen into and become, we're getting a lot of questions about and asking, getting people who are wanting us to set these up are captives. And if you need any help, once again, Ken or French at vastsolutionsgroup.com.